What's going on, ladies and gentlemen? Welcome back to another great video. For those of you that tune in, you are not confused any bit as to what is happening today. You are 100% up to speed. For those of you that are newer to the channel that haven't seen this video, which probably won't be many of you, but for those of you that are newer in seeing this video, what we're going to do is we're going to watch today's video posted this morning, which will give you foresight analysis. We will then look at the market and see how it has performed and then teach you everything as to how you could do the same. All right, so let's watch this video. The white one, and we're stopping. So until the SPY actually gets above this trend line, the market's probably not going to be any too more bullish for right now, okay? So you should expect that since we have gapped up into this trend line, the market will or has been trying to pull back off of it, okay? So the only way you could really suggest the markets have shifted a lot of momentum to probably start kickstarting, back into an uptrend is, for one, you would have to clear back up above that trend at about 464 here on the SPY. Okay, so if we were to look at a 10-day chart, it doesn't really look that good, never mind. Yeah, so, I mean, like I said, for the SPY to really, get some momentum here, or more so, you would need the markets to get back up and over 464, all right? So the way that I would follow the SPY on the long side is if market gets up and over this price of 464 with a lot of buying volume, then we could see maybe your move up to 467 on the day. All right. Now, if the market... All right. So I will continue on that video and give you guys a couple different scenarios. So, being a stock market guy, looking at a chart and giving you guys YouTube videos, the fact of the matter is any idiot is going to be right. At some point, right? Like a broken clock is right 2 times a day. So, with that being said, that's why I keep up multiple broken clocks all around, because you're right. I don't know exactly what's going to happen, but, I have an idea as what can happen if something does happen. So that's why we just creep, multiple broken clocks up and go, oh, that broken clock is telling the right time. Once we have figured out that this clock tells the right time, that's what we look for, and that's the trend we follow. So in today's early video posted on the market, blah, 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 basically it says, once you clear 464 with good buying volume, the market will probably start to trend towards the price of 467. So now what we're going to do is we're going to go back and we're actually going to look at the stock charts, and we're going to first just look at something. We'll look at a chart, if it ever works. We'll look at a chart with, not a ton of indicators. We're just going to look at pretty much a naked chart here. All right, let's get it full screen if it ever works. Maybe. There it goes. All right, so based on the video this morning, this was the white line we're referring to. All right, and you'll see that it's actually at 464.58. In the video, we suggested 464, and that's probably because we were just being easy, saying watch for 464 as opposed to 464.68. So it doesn't matter. Blah, blah, blah. But the white line, right? You can see market once clears white line with good volume, you will probably trend towards 467. The market topped at 466.57. So that's 43 cents off a target we had suggested on the long side. The reality is, this is probably still pretty bullish. If you're long and you're watching the market, you probably don't have too much to freak out about, okay? Stay on the long side. There's a good chance this continues to pump. The only time I would even consider being scared or not bullish is if the market reverted back down and below the 464.64. Now, why would that make me nervous, all right? Let's actually look at a long-term chart and really help you guys understand what that 464 white line is. If you don't understand what that is, don't know what it is, then yeah, this is all extremely confusing to you. So let's go to a chart that has our strategy on it. That was a naked chart. All right, we're gonna look here. How do we actually get that level around 464? by using a 180-day, 4-hour time frame and a statistical standard deviation trading system strategy, if you may, which gives us this white line right here. So I wake up this morning and have to do nothing. I just literally go, okay, market gets over that line, you might see a little bit of bullish activity. Where is that white line? That's where the white line is. Okay? Then I go to a 1-year, 1-day chart and go, all right, where's the level on this time frame? You see this white line? I wake up this morning, I switch the time frame to 1 year, 1 day. It's automatically plotted for me. It's great. Then I just make my own level over that, because when we switch to a 1 minute or a 5 minute for intraday trading, you're no longer going to see the long-term levels that are provided via the long-term chart. So I just map them out. So when I switch the time frames, I go, there are our 2 long-term levels. Successful break of this long term, we go to next long term. And that is literally all I do. Sometimes it works really well, sometimes they're not perfect, but I mean, that's pretty much it. Come in every single day, map off our closest statistical levels, and basically say the market is going to trade to these levels. And if you trust this, it works. So today, how do we predict that the market can go to 467, which it hasn't fully gotten there yet? Simply by finding long-term statistical trends. Once we clear one, we just expect we're going to go to the next. And that's pretty much it. So that level lined up with the pre-market high. So today, you probably had some traders coming and going, oh, we're going to get a high-a-day break. We're going to get a pre-market high break. So they traded into that move on the assumption of a pre-market high break, high-of-day break, which they're not wrong. It is breaking high of day. It is breaking the pre-market high. Behind the scenes, there is a long-term statistical mean there that also lines up with the pre-market high. So now you must ask yourself, why or what defined the pre-market high? Right? So when you come in for the day and go, oh man, I should, never mind. I was gonna be like, I should make a video on, no, doesn't matter. So when you come in for the day and you go, I'm gonna trade over the pre-market high, the high day break, right? I'm not doing that. I'm going, you know what? We have the long-term statistical mean there. We should trade back to that because that's the fair value. And if we can cross above the fair value, which also lines up with the high day and pre-market high, yeah, there's a breakout. And then that breakout should take us up to the next long-term level. Right? So really that's pretty much it in a nutshell. So if you wanted to kind of visualize how I expected this would be a breakout level for the day and how far we could see this move potentially trend to, which is this white line, which we haven't gotten there yet, which means this could just be a small little consolidation phase before we ramp back up to those prices tomorrow. We'll see. On the same token, remember that the market broke out here. So we can also see the market roll down to retest the breakout right there. So in the event the market SPY rolls down on the day and ends up hitting a price of 464.50, which I'd be surprised if it did, but if it does do that, that is most likely going to be a low risk dip ad. Ironically, what's it line up with? The breakout and the daily high and the pre-market high. So you'll be looking at this down here going, oh, we're at the breakout, we're at the pre-market, so I'm going to buy long, right? I'm going to dip buy it. Meanwhile, I'm just saying this is just the long-term statistical mean price. That's why we created a pre-market high. That's why we broke out here. And that's why there's a good chance that this magnets back down to that level to test it. And I think I'll end it there because I don't know how much more I can say. Oh, actually, another reason the market's probably stopping here is because the 9-day moving average is there, which wasn't actually on the chart that I was using for trading today. So that's probably another reason why you're stopping here. You see that blue dotted line? That's the 9-day moving average. So like, yeah, I mean, all right, I'm done. You guys got it. You guys are killer. You guys are savages. Peace. Have a good day.